Now, I know you're thinking to yourself right now, gosh, if only there was some bit of news or release that would continue to drive the Australian dollar to the downside. Well, it's no guarantee, but we do get news starting the week out very fresh with the minutes from the RBA, the Reserve Bank of Australia. It's a big deal. It's something we're going to be watching fairly closely. The decline over the last few weeks has been really extraordinary. It's been something to see, that is for sure. And if you look at where the market is right now, you'll notice that we're popping just down along the bottom of where we were very early this year and very late last year, December and January. This is also that little consolidation, that rising bear flag during the price shock in July and August of last year. So this is a fairly auspicious level from a technical perspective. We're going to be watching it very closely. A break of this level really puts us into free fall. I mean, we could see the Aussie dollar in the 70s again. However, we have had a bit of a consolidation here recently with a near doji just the other day. And then the market approaching support, or this range of support, and bouncing off of it a couple of times. So it's one we're going to be watching very closely to see what's going on. What does the Reserve Bank really think? And in light of the fact that their currency has adjusted so much against the US dollar, this announcement is likely to have some real meat in it. So this is one, normally I kind of brush off the RBA minutes, but not this time. This is probably going to be a big deal and could easily set the tone from Monday on for what do we expect in the commodity currencies. The dollar yen right now is a great example of the trader's quandary, and that is how far do you trust a trend, particularly a new trend or something that is showing some fundamental signs of a little weakness. Which is something that I'm seeing here lately on in equities, and how much is that going to bleed over into the dollar yen, or is it going to pan out to be weak at all? But the takeaway that I always say is, look, you got to trade with the trend as long as the trend's in play. And it's a matter of just managing your risk. So, for example, yesterday I was talking about on the dollar yen that things look weak, but that means hedging against that weakness, not necessarily exiting and trying to reverse the trade. It's not a binary decision. It's really something that is a gradient of how conservative do we want to be. Now, as we look at the dollar yen, we can see that we're sitting basically on top of, we bounced off of this support level that we were looking for the other day when I did the pairs analysis earlier this last week. We got pretty much that had to happen on the 13th. And then subsequently, the market has bounced up quite nicely. Well, I bring this up because on Tuesday, we're getting an announcement from the Bank of Japan, so we get their insight into what's going on in the market. It's clues as to what's likely to be coming up in their monetary policy. So there's not necessarily any changes here, but they may be signaling, and it's one of the ways in which they manage monetary policy, by managing traders' expectations through what they say. That's the big announcement on Tuesday. So that's the one we're going to be watching, because we could clearly get a little bit of a reversal. I still like the US dollar, Japanese yen long above support here. So above 108.50, it's looking good. Still like it as a long play. If we break this support level, which we're pretty close to that level right now, but if we were to break this, that's when I might start unwinding or taking some long profits off the table. And we're skipping over to Wednesday with retail sales in Canada. Typically, I have noticed a correlation between retail sales numbers and the commodity currencies and volatility. So you'll notice that there are periods where the retail sales number seems very correlated with a disruption in prices. Not all the time, but quite frequently. And if you go back in history, you'll see this as a fairly frequent occurrence. The reason why it stands out is that not only is it correlated with volatility, but oftentimes it goes the direction you would assume that it should. So weak retail sales are bad for the Canadian dollar, and strong retail sales are good for the Canadian dollar. It's not a lock or anything, but it really is a matter of a function of not only how often is it predictive, and how big is the subsequent move. Because if you have a low predictivity, or how predictive it is, the ratio is a little bit low, but your volatility is very, very high, then you still have an opportunity there, and vice versa. So it's one that we're going to be paying very close attention to, particularly considering the fact that and this has been true of most of the commodity currencies, have been on such a run to the downside against a very strong dollar for very unusual reasons, and falling commodity prices. So we're going to be watching this very carefully. This little consolidation we've been having this week on dollar CAD has all the writings, it has all the appearances of a potential continuation pattern to the upside. So I want to see the retail sales. If it comes out negative in Canada, we could definitely see a continuation of the upside, but that is one that we're looking for. From a trading perspective, I almost think this might be an interesting opportunity for a option position. So maybe buying even a straddle in the intermediate term. Although those options are a little inflated right now because of recent volatility, the move could be extraordinary, and that could be a real, very interesting opportunity on just about any of the commodity currencies, but specifically the dollar CAD right now with retail sales on the horizon. I'm actually going to end my analysis as far as those announcements that I'm most concerned about on Thursday with retail sales out of the UK. So again, one of those currencies that I would classify as a commodity currency. And you can see the same kind of thing. The retail sales are fairly correlated with price shocks, so it is something that I'm really interested in. And in particular, the big moves. So those that were very big surprises, the last two being a good example of that, are the ones that we pay the most attention to, and that makes sense. Sometimes when you're looking at retail sales numbers, you ignore those that had a much smaller deviation. You concentrate on those that had a much larger difference from what they actually were versus what they'd been in the past and what they were expected to be. When you find those big announcements that were a big surprise and led to a predictable conclusion, so a move in the price, you tend to pay a lot more attention to it. So that's what we're looking for next Thursday is, are we going to get a big move? If we get a very small difference, it's not a matter of, well, it was above or below expectations, because if it's not above or below by very much, you can almost chalk it up to statistical error. It's very difficult to say whether it was a good announcement or a bad announcement. When it gets way beyond those barriers, so those boundaries, into a big surprise, that's where we start to pay attention. And right now, retail sales looks fairly predictive when we get that big surprise. So obviously the thing that would be most disruptive would be a positive announcement. We're not expecting that, but if we did, it might be a signal for traders who have been short for the last couple of weeks to start looking at some coverage on those positions. In the meantime, however, it still looks good as a short position.